Hey everyone, welcome back. So I hope you guys had a great Friday. It's been a rough week. Obviously, we got war going on in Ukraine and Russia. Basically, Russia attacking Ukraine. My thoughts and prayers are with the people of Ukraine. But we got a couple of stories to talk about. One is Bitfarms provided an update. They got financing, a loan for basically their operations and miners. We'll take a look at that. We'll take a look at also a story about Bitcoin wallet addresses increasing, so people are buying the dip. And we'll take a look at a story about a FUD story on how the migration of Bitcoin miners from China has increased the pollution basically because of it. So we'll take a look at that, and I'll provide you some context into it as well. So as always, not financial advice, for entertainment only. Do your own research. Don't fall for scams. Spam posts get reported and deleted. I'm invested in the following companies and coins for full disclosure. So let's take a look at the markets here really quick, and then the miners and Bitcoin, and we'll get into the story. So obviously a good day for the markets today. S&P was up 500. S&P 500 was up 2.21% on the day. Dow Jones ETF was up 2.47%. The NASDAQ was up 1.64%. So it's a continuation from yesterday's increases as well. So that's good to see. Markets are kind of rebounding. And let's take a look at the miners here really quick. So ANY was down today 1.79%. It was up a little bit yesterday. And then we got Argo was down 4.33% to 86 cents. Bitfarms was down 2.95% to $3.29. CleanSpark was actually basically flat today. It is up a little bit in after hours to 960. And then we got Core Scientific was up nicely today, 11.27% to $9.38. DigiHost was up 4.38% to $3.10. DMG was up 2.76% to 43 cents. Hive was actually down today 1.04% to $1.91. HUT was up 0.53% to $5.74. Iris Energy was up 4.4% to $14.47. And Marathon was up 0.48% to $23.07. Mawson was up 2.71% to $3.79. And Rye was actually down 0.18% to $16.22. So a mixed bag here on the miners. So we'll take a look at them tomorrow, see how they compare to Bitcoin. So let's take a look at Bitcoin here now. So Bitcoin right now finished out the day being up. So we were obviously higher yesterday, but we came down in price towards the end of the day. But we did obviously pick up another 2.32% on the day today in Bitcoin, and it is trading right now at 39,210. Roughly, RSI is still looking good. The one thing I did see on the 1 hour chart that made me a little bit more optimistic on the future going forward, at least in the short term, is we see that the price has gone up while the RSI has gone down from here. So we were here at 38,421. RSI was getting close to the overbought territory. And now it has come down to about 57 or so, and the price is at 39,223. So obviously an increase in price, reduction in the RSI is a good sign for Bitcoin to possibly continue going up higher. We obviously have this resistance here at 40,700 or so, and our support still is at 37,500. So we'll see if we can muster the strength to go above it. But right now, all signs are pointing yes, unless something changes. So we'll have to keep an eye on that one as well. And then here's Ethereum. Ethereum is also doing the same thing. RSI is looking kind of flat right now. If we look at it from, yesterday, 24th, we were at approximately 2,654. And the RSI was at 67, you could say. And then we are here right about 66 or so on the RSI as well. But the price has obviously gone way up. So we can see that price going up, RSI holding flat in the time span, so that's a good sign as well on Ethereum. So I do think we may see some price action happening over the weekend. And let's take a look at the hash rate right now. So the hash rate, we will reload this page. Right now is actually down a little bit on the day. It is at 194 million on the hash rate. But we did obviously have a peak here a little bit of 230 million or so. So we're down a little bit on that, but it's not too bad. And this is the average hash rate per day. Let me see if we can get, nope, we'll just leave it at that. All right, so let's take a look at our first story here on Bitfarms. So Bitfarms enters 32 million equipment financing agreement. So global Bitcoin self-mining company entered into a 32 million equipment financing agreement. So I like this. This is obviously not diluting shareholders, so this is good. But the financing terms are a little high, but we'll see that. So this equipment financing agreement provides another source of non-dilutive capital, enabling us to finance equipment from our established mining operations so that we can invest growth capital into miner purchases in our new farms under construction, said Jeff Lucas, CFO of Bitfarms. With Bitcoin BTC miners purchases making up the majority of our capital needs, this 32 million equipment financing frees up working capital and supports our flexible and non-recourse financing options, which also included our recently announced 100 million BTC collateralized loan facility. Under the terms of the financing agreement, the company entered into an equipment loan for the recent purchase of and is secured by 6,100 Bitmain S19J Pros for a total of 32 million. The loan carries a 2-year term and an interest rate of 14.5%. I'm surprised that it's that high, but I guess that's how loans go for businesses. I'm not sure how high they're supposed to be or how low they're supposed to be, but that seems a little high. But otherwise, I'm happy with it. Obviously, they're not diluting shares, so that's always a good thing. That's something we want to see, whether they're using their Bitcoin, the HODL strategy, and getting loans against that, or doing something like this. It's a lot better than diluting the shares of investors, so I'm okay with this. I think this is actually good news by them. Okay, next story is on Bitcoin investors buying the dip. So the number of Bitcoin addresses holding small quantities of BTC continues to increase. This is continuing what I keep saying, adoption. The more adoption we have, the price is going to continue to go up, whether it's through retail investors buying, whether it's institutions buying, governments buying, whoever's buying, it all leads to adoption, and it all leads to price appreciation in Bitcoin. So investors bulk up Bitcoin holdings. The number of Bitcoin addresses with balance greater than 0.01 BTC, around $400, reached a record high of 9.51 million. The latest data from Coinmetrics shows, meanwhile, the number of addresses that hold at least 0.1 BTC, around $3,800, also reached 3.34 million for the first time in history. So that is obviously great news, bullish signal for us. On the whole, Bitcoin's network added a little over 24,500 addresses with a non-zero balance on Thursday, coinciding with BTC's choppy price moves from around 37,200 to below 34,500. Obviously, this was because of the invasion of Ukraine, followed by the recovery toward 40,000. And we've seen that price happen here. Data Resource Econometrics divided the addresses into two groups, one that holds less than 1 BTC and the other that holds anywhere between 1,000 BTC and 10,000 BTC, noting that both groups have been buying the Bitcoin dip and saying, probably a smart move if you have a long-term investment horizon. And I keep saying this, I'm a hodler of Bitcoin, Ethereum, and some of the other coins. I'm buying for the long term. I'm not a trader of them. So, do your own research as always, but this might be a good buying opportunity, buy the dips, as they say. As the Ukraine crisis unfolds, the prospects of higher inflation may also be rising, with the Ukraine-Russia conflict leading to higher commodity prices globally, despite the United States Federal Reserve preparing to tighten policy next month. That was obviously weighing heavily on not only on the markets, but also on Bitcoin. But Mohammed El-Arian, the chief economist advisor at Allianz, stated that the central bank's officials would not pursue its aggressive rate hiking plans amid the worsening geopolitical outlook. This takes the 50 basis point rate increase completely off the table, he told CNBC, adding, it takes the 8 to 9 hikes people were talking about for this year off the table. I don't think the U.S. economy could accommodate such slamming of the brakes of the monetary policy. It means the Fed is going to have to be even more careful and tolerate inflation. There's going to be obviously a lot of pain in the markets, and not only in the markets, but also for people themselves. The energy prices are going to be going through the roof as sanctions have been applied to Russia for their invasion of Ukraine. That's going to obviously cost a lot more at the pump. It's going to cost more in electricity, other things as well. So we'll have to see how this plays out, but this is obviously something that could be a good sign, maybe a little bullish sign that things may go up. Walter Bloomberg also tweeted, Goldman Sachs think geopolitical uncertainty further lowers the odds of a 50 basis points hike in March. I would agree with that. A lot of people were pricing that in as being possibly 50, but now it looks like it might be 25, and we'll see if when the next one will come in after that. Michael Saylor, CEO of MicroStrategy, commented on Iran's Fed outlook, saying that the ongoing Ukraine-Russia conflict could create inflation and make Bitcoin compelling. I agree with that as well. People are going to be looking for safe havens, possibly to store their money. And then we have, what do we have here? Oh, Bitcoin below 30K next. It is possible, obviously. So Nick, an analyst at Econometrics, also noted that Bitcoin's price could undergo a price correction below 30,000 despite having a strong upside outlook in the long term. The reason cited is the imbalance between bearish and bullish positions on the Chicago Mercantile Exchange. Bitcoin options market skewed more towards the former, so obviously skewing more towards the bears. The puts to calls ratio on the CME Bitcoin options market remains at 3 puts for every call. He wrote in a report published on February 23rd, adding that 50% of the puts are on strikes, are now below 30,000. So that gives you an idea of what the market expects in the short term, right? So obviously do your own research as always, invest in the long term. If you do trade the market, be careful out there because you could get wrecked relatively easily. All right, now the story here. I've seen this story pop up in 2 places. So this was Bitcoin less green since China ban. Research suggests this was in the New York Times. I saw this in other places. This is actually from BBC. But so I wanted to read into it, see what the heck they're talking about here. And I'll provide you some evidence that may counter this. So in here, the interesting parts of it are the share of renewable energy powering mining fell from 41.6% in 2020 to 25.1% last August as miners stopped using Chinese hydro and moved to the U.S. where gas supplies much of their power. There's a bit of truth to that, but it's not all that correct. The Chinese miners that were using the hydro, they were only using them for a couple months during the wet seasons. We'll get into that. And we'll also get into the differences between coal and natural gas. So we see the network becoming less green than ever before. Alex de Vries, one of the authors of the peer-reviewed study published in the journal Jewel, told the BBC. So I actually went on that site to check out the peer review, but I couldn't get it because you have to pay for it. But it did cite their sources, so I was able to look at some of the sources that they looked at and came up with my own sources as well. So power hungry, obviously we know Bitcoin is power hungry, but it's getting better. Each year we're seeing that Bitcoin miners, the ASIC miners, are getting more efficient. We're now at 140 terahash at 3,000 watts. Possibly the new miners that are coming out later on this year, if they're developed, will be 440 terahashes at possibly like 2,300 watts or something like that, even more efficient. So efficiency is only increasing as we get into the industry, as the industry matures, basically. In the past, Bitcoin miners in China would move in the wet season from provinces with inexpensive electricity generated by fossil fuels to those with abundance of hydro, right? So here's where they actually get it right. So you would have in months, season, whatever the season would be, whether it's 3, 4 months, 5 months, they would be using the hydroelectricity. And then when obviously those weren't operating, they would be moving those to fossil fuels. And the fossil fuels were coal plants. Coal plants are dirty. But after the bans in key provinces, mining was more or less limited in China by June 2021. Forced out of China, mining moved to countries such as the U.S. and Kazakhstan. Yes, the U.S. got a majority of those transferring over. Kazakhstan obviously grew as well, but the U.S. got the majority of those. Researchers say this could be why Bitcoin has become less environmentally friendly. This is where I disagree. And we'll point out some of the things here where I disagree with it. Carbon flight. So the U.S. grid only has a small part of its entire system sourced from renewable energy, said Mr. De Vries. Said he added that many of the states popular with crypto miners such as Texas, Kentucky, Georgia performed worse than the national average in terms of the amount of power generated from renewables. That could be true, but they're not using at least coal. They did point out here, obviously, that Kazakhstan, the researchers say, has coal-fired power stations burning hard coal, which is true. And let me see if there's anything else here that I wanted to go over. And I just go into going green. Going into the Crypto Climate Accord is one such initiative, which is going to be hard to get into, and things like that. They want to basically ban a lot of the mining here. So here is the article on Joule. It's a peer-reviewed article, obviously. You have to pay to get it. But they did obviously sort the references. So the references are harmonizing corporate carbon footprints, Bitcoin's growing e-waste problem, China's crypto miners make hard choices to meet climate goals, Carbon footprint of Bitcoin. Latest data shows U.S. now leads with 35%, so that's okay. New York and Texas are winning the war to attract Bitcoin miners, so this is one that I actually pulled up. Kazakhstan's deadly protests hit Bitcoin as the world's second biggest mining hub shuts down, so they took that into consideration, which is fine. We know about that. And then implausible projections overestimate near-term Bitcoin CO2 emissions. So they had quite a few articles in here, but they cherry-picked the information, I think. And so let's take a look at the article from CNBC. So New York and Texas are winning the war to attract Bitcoin miners. Here's the important part of it. Many of the states ranking the highest are epicenters of renewable energy, a fact which has already begun to recast the narrative among skeptics that Bitcoin is bad for the environment. While Carter acknowledges that U.S. mining isn't wholly renewable, he does say the miners here are much better about selecting renewables and buying offsets, which is true. The migration is definitely a net positive overall. He said hash rate moving to the United States will mean much lower carbon intensity. And I think there was something else here. Yep. Crypto mining company CoinMint, for example, operates facilities in New York, including one in a former Alcoa aluminum smelter in Messina, which taps into the area's abundant wind power plus the cheap electricity produced from the dams that line the St. Lawrence River. The Messina site, a 435 megawatts of transformer capacity, is billed as one of, if not the largest Bitcoin mining facility in the United States. Obviously, there's guys in Texas now that are going to be larger than that. Let me see if there was anything else. Oh, and then there's Texas. So the appeal of Texas comes down to a few big fundamentals: crypto-friendly lawmakers, a deregulated power grid with real-time spot pricing, and perhaps most importantly, access to significant access energy, which is renewable, as well as stranded or flared natural gas. So stranded or natural gas or flared natural gas. So obviously you have a lot of the oil producers out there. They, in the process of producing or pumping out oil, they also have natural gas. The natural gas is then burned off and it's not used for anything. It's just a waste, right? So a lot of the miners, what they're doing is they're plugging into that. They're hooking up a generator that will run on the natural gas, which powers their Bitcoin miners to do that. So now you're actually getting something for that natural gas that would normally be wasted. So they didn't take that into account as well. Some miners plug straight into the grid in order to power their rigs. ERCOT, the organization that operates Texas Grid, has the cheapest utility scale solar in the nation at 2.8 cents per kilowatt hour. The grid is also rapidly adding wind and solar power. And this is all possible because the miners that are coming online there, they're adding to the income of those power generators, and they can obviously expand and increase their renewable energy. Another major energy trend in Bitcoin mining businesses in Texas is using stranded natural gas to power rigs, which both reduce greenhouse gas emissions and makes money for the gas providers as well as the miners. Carter says that if it is fully exploited, flared gas in Texas alone could power 34% of the Bitcoin network today, which would make Texas not only the clear leader in Bitcoin mining in the U.S., but in the world. And I agree with that. So next this is from China Dialogue. So great mining migration, power hungry Bitcoin miner leaves. You guys can check that out if you want, but here's the important part that I found on it. So China wants a Bitcoin mecca. Hydropower supplies most of the electricity in the mountainous province of Yunnan and Sichuan, where miners would migrate for several months each year. During the wet season to take advantage of excess electricity. Inner Mongolia and Shaiqing still rely heavily on coal. And this is where they were getting the power when they weren't using the hydro electricity. Unchecked Bitcoin mining operations in China alone were set to generate 130.5 million metric tons of CO2 by 2024, around the same as the total annual emission of Czech Republic, according to the 2021 study in the journal Nature. So, right, something they didn't take into account. They were only, I don't know if they were only using it, but seems like they were only using in that article that's bashing Bitcoin, was the use of hydroelectricity, which we know this wasn't the case for the full year. It was only for a couple months during the year that they were using it. Otherwise, all of the other miners were running on coal power, which is dirty. And then, so here's a natural gas story. So from the National Academies of Science, Engineering, and Medicine, natural gas provides 29% of our energy. And here's what they have to say about natural gas. So natural gas is often described as a clean burning because it produces fewer undesirable byproducts per unit energy than coal or petroleum. Like all fossil fuels, its combustion emits carbon dioxide. but at about half the rate of coal per kilowatt hour of electricity generating. So this is huge. This is a huge difference between the two. It is also more energy efficient. On average, a typical coal-burning power plant in 2013 was about 33% efficient in converting heat energy into electricity power. A gas-fired fired plant was about 42% efficient, and in natural gas combined cycle power, the plants in which waste heat from natural gas turbine is used to power a steam turbine, generation may be as much as 60% efficient. So here's the typical difference. Typical coal-burning power plant, 33. Typical natural gas combined cycle power plant, 60% efficient. Huge difference in it and the amount of carbon dioxide that is obviously being expelled into it. So always be mindful of the stuff that's coming out. Do your due diligence on it. There's obviously a lot of people, I don't know, rightfully so, or just are concerned, but I think they cherry pick their data a little bit, and I could be accused of doing the same thing, picking out things that I want you guys to know. But I'm a strong believer that as the industry matures, it's only going to get better. Not only resource intense wise, it's going to go less, but the renewable energy that's going to be used to power this industry is going to be obviously increasing as time goes on. So it's only going to get better over time. So that's it. I hope you guys enjoyed it. Obviously, Bitfarms, good thing to see that they're not diluting shares. Bitcoin investors obviously are stacking Satoshis, which is good as well. And we do have some fun out there on Bitcoin mining not being as green as it should be, or creating basically more carbon dioxide because they moved out of China, which is just ridiculous. So let me know what you guys think. I hope you guys have a great Friday. Have a great weekend. Wish everyone that's in Ukraine, safety. Hope they make it through this okay. And then we'll see you guys tomorrow. We'll do the miner versus miner video, and I'm working on Sphere 3D deep dive that'll be coming out later on this week as well. So that's it. Thank you guys so much for watching. If you enjoyed it, hit the like button, subscribe, helps me out tremendously. And until the next one, I'll see you guys then. Have a great night.